Hello and welcome to Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Mangalam Malu as well as Vinny Motiwala. Well, we are glittering like the market is this afternoon. So happy Diwali to all our viewers and their families. For the Nifty, we're up around 133 odd points, no complaining there. And we have the Bank Nifty, which is really moving ahead with a gain of around 0.8%. So absolutely no complaints coming in. It's a happy Diwali at this point in time. We have the Muhurat session as well. So maybe there is more momentum which is coming through. 25,842 is currently where the Nifty is at. Slowly inching towards that 26,000 mark on a more sustainable basis. Hi, guys.
Hi, Ekta. Let's see whether that 26,000 mark comes or not. But just for today, it's also the weekly options expiry because of the Muhurat session tomorrow. And there have been a lot of calls written at around 25,900 and 26,000. So after a big rally that we've seen culminating all the way up to the Diwali session, we may see some supply around 26,000, but be that as it may, no complaints for the market. You know, the top three batters all in fine fettle. You have Reliance, which is picking pace. We have the Nifty Bank, which is at a record high and only building on to gains out there. The broader market banks are doing even better, some clocking in double-digit gains. And the IT index, not particularly underperforming either. We have the IT index up around 0.2%. So all the three batters for the Nifty doing extremely well. The broader market is doing even better. The only thing that could have added to the shine would have been the advanced decline ratio, which is still at an even keel. But, who's to complain? It is a lot better than what we saw earlier.
Absolutely. Hi, guys. Good afternoon and happy Diwali to both of you all as well. Happy Diwali to our viewers. But talking about sectors and the cheer that is there in the market, all the sectors right now are trading in the green. So no complaining there as well. We're managing to hold on to gains. Even the metal sector, slight bit of a flip-flopping between the red and the green. But right now, a bit of a positive bias is what we're keeping an eye out on for the Nifty metal as well. And Mangala mentioned, whole host of these banking names that are buzzing in trade. We had them report their numbers over the weekend as well. AU Small Finance Bank, RBL Bank, Federal Bank, all of them managing to hold on to gains as well, Ekta.
Yes, absolutely. It's a day for the entire banking space as well as the likes of Reliance Industries, which are gaining. But let's talk about one specific stock which is in focus, Biocon Biologics. The subsidiary of Biocon, which is basically contains the biosimilar business, announced the expansion of its strategic collaboration with Civica. Now, the partnership includes a new insulin glargine, which they will be basically distributing. It's going to be access to the affordable, high-quality insulins in the US. To discuss this and more, we have Shriram Tambe, who is the CEO and MD of Biocon Biologics, who's joining in now. Mr. Tambe, thank you very much for joining in, and a very happy Diwali to you. It's definitely a positive for Biocon Biologics, considering that you all have this new partnership with Civica. In fact, you all have extended your partnership with Civica for insulin glargine in the private market. You haven't disclosed any financials of this particular tie-up, but give us a sense in terms of what this means for Biocon.
Thank you, first up, Ekta, for having me on your show, and happy Diwali to you and to all your viewers. Clearly, it's a very, very significant development, not just for Biocon, but a very significant development in terms of how insulins will be made available to patients in the United States. This is something that's been going on for a while. We've been working with the government of California. And if you track this, the governor in California, Governor Newsom, had actually talked about this in 2020, where he realized that Californians didn't have access to high-quality, affordable insulins. And given that Biocon has an approved biosimilar interchangeable insulin, which we've been commercializing in that country for a while, we wanted to collaborate with the government of California. And we're very proud that through the nonprofit organization Civica, we will be able to distribute the CalRx branded insulin, which is the same high quality insulin that we already sell in the United States. So very significant development. And just tells you the power of our commercial platform that allows us to bring products through the commercial channels that we're currently doing, through closed door networks that we've done with the other hospital networks. And now you're seeing us bring product from our manufacturing directly to consumers or to pharmacies. So it just tells you that we are in a position to bring products in a more affordable manner and work on that health equity legacy that our founder Kiran's really been very committed to.
Right, Mr. Tambe. Also just how much does the company then make from this tie-up? If you could give us any number or indication there as well.
Yeah, I think that's a very significant question. And without diving straight into how much we would make, let me just scope the opportunity for you and where this is. The insulin glargine opportunity, which we've just signed up for with the California government through the Civica partnership, is about $1.3 billion just in the United States. California is a large state. It has about 12 to 15% of demand within that over $1 billion of sales that you see. Part of it would be Medicare, part of it would be outside of it. But a very significant portion, if you see the announcement that Governor Newsom's made, these pens will be made available at $11 a piece. And now, if you look at that as a 15% of over $1 billion, you're talking about anywhere in that $150 to $200 million opportunity just in one of the 50 states. Clearly a very accretive opportunity to what we already do. We have a significant business, and this is just another way of reaching patients who need insulin.
So how does this change things for your own insulin glargine? I mean, when it comes to the pricing, when it comes to supply, how does this impact that?
It actually impacts it in a very positive way because it just, like, as I was saying before, it just tells you the power of our commercial platform. We are able to commercialize products in whichever way that our consumers are looking for. We can commercialize it directly through consumer, like you're seeing it here in the case of Civica, which will distribute it directly through pharmacies without as a not-for-profit option. We can also do it through the commercial payers that we cover 60 odd million lives and more. So that's the other channel. We also do a direct to closed door network hospital chains who procure on insulins and give it to their patients. So that's a tremendous flexibility, I would say, that we've got that allows us to be a very significant player in the insulin space.
Okay. Well, Mr. Tambe, this agreement or this tie-up with Civica comes at a time where there's a lot of uncertainty in the US when it comes to the policies on pharmaceuticals. But maybe there is a little more clarity considering that now, the Trump administration has indicated that maybe Section 232 would be something that they're not actively considering at this point in time, and maybe tariffs on generic pharma is off the table. Do you think that Indian generic pharmaceuticals are out of the woods when it comes to this uncertainty?
I think let's talk about the certainty first for a minute, because I think there's a lot of uncertainty we talked about. The one certainty in this whole thing is that the administration in the US has been committed to making America affordable again. Now, whichever and how they do it, people can have views, but their commitment is how can we make healthcare more affordable for Americans? And that's where they've identified generics and biosimilars as the part of the solution. So we are clearly a part of the solution. We are a part of making sure that we can help the healthcare costs in whichever way. What we've done today with the California government is another proof of the pudding there right in front of everyone, where we can deliver products in an affordable manner. I think there is more clarity than before, I would say. The Section 232 investigation closing off is a good sign. I would think that the appreciation that the maintenance of not just the health of the United States, but the health of the planet is on the generics industry. And I think that appreciation is growing, which allows us to then provide products, high quality products at an affordable price to several million patients.
All right. Is Biocon impacted at all with regards to that 100% imposition of tariffs on branded products? unless a company has a manufacturing presence in the US. We do understand that you do have that manufacturing facility in New Jersey, but in any way that Biocon's products or branded portfolio would probably be at risk due to this?
Actually, none at all. We have no risk with that that guidance that has come through. And more importantly, like you just cited, we have a investment in Cranberry, New Jersey, which we just inaugurated. But as a group, we also have an investment in Baltimore, where we've got an investment in drug substance biologics, which our group company Syngene has invested, where we acquired a facility recently. And then, if you look at the previous announcement, Biocon Biologics has also extended its partnership, where we are manufacturing even our insulins with silica in the United States. And many of these conversations predate the tariff discussions because they make a lot of business sense and provide a lot of predictability of supply to patients, where we have a large consumer base. So it's been predicated not only on the tariff discussions, which may be at that point in time, but more importantly, a sustainable business case, which is underwritten some of these longer-term decisions that we've made at Biocon.
All right. Well, I know you are on your silent period, so it'll be difficult to sort of discuss numbers. But if I could just extend one more question with regards to what's taking place in the US, because we do have the Biosecure Act, a watered-down version which has been passed by the Senate. In that sense, as an industry veteran and a watcher, how much of an impact do you think the Biosecure Act would have on CDMO companies or on Indian pharmaceuticals, in the context that it's a watered-down version of what it was earlier?
Yeah, I mean, without getting into the specifics of the acts, I think if you look back in time and if you see, since the mid-80s of the Hatch-Waxman Act and then subsequent to that, I think Indian generics companies have been one of the biggest allies that the US has had. A very significant portion of what the US consumes today is an Indian product, and it's a high quality product. So I would look at this whole thing, more from an exclusion standpoint. I would look at more as an inclusion standpoint, where I think India is really a natural ally of the US and continues to be committed to maintaining the health of patients in the US. So I'm actually not specifically concerned about an exclusion of certain countries or certain companies in the Biosecure Act or the watered down version, because there is enough and more that companies can contribute to. India has a large manufacturing base, and it's moved up the value chain on the innovation front. And with companies like Biocon working on cutting edge biologics and science with a commercialization capability in several countries, I think Indian pharma is here to stay as a global presence.
Okay, Mr. Tambe, thank you so much for joining us on the show, talking to us about your business as well as in terms of what these tariff uncertainties and the outlook going forward over there as well. Thank you so much for joining us this afternoon. Let's move on, and a quick note for our viewers as we step into the break that as you can see on the screen, there is going to be a money control stock score that has been coming up just above the line graph. Now, this is a score assigned to each stock based on money control's multi-factor algorithm. It is calculated by analyzing 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and a T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions. Let's slip into a break. After the break, we'll have Nikhil Khandelwal, Managing Director of Systematic Groups, joining us to discuss RBL Bank's as well as Emirates NBD's deal. Stay tuned in for that. Welcome back to Halftime Report on CNBC TV18. Nifty as of now managing to hold on to 140 points of gain, almost 0.5% of uptake for the Nifty 50. But which are the stocks that are buzzing around in trade? We have Vivek to take us through that list. Vivek, good afternoon.
Well, thank you so much for that. Again, a session where we're actually seeing more green rather than red, especially in the broader end of the market, which are stocks doing quite well. You have to start off with Reliance Industries. Very strong set of numbers. On the back of that stock, higher by over 3%. One of the top gainers as far as the Nifty is concerned. One of the primary reasons why markets are significantly higher today. The other set of stocks that are doing very well are the mid-cap private financials. You're seeing multiple deals come through. Number one, of course, look at RBL Bank. 8% higher, even after the rally that we've seen over the last 2 months. Our Federal Bank, again, fundraising plans over there. Market is keenly anticipating that. Innocent Bank and Yes Bank, despite muted results, doing quite well in the session. Along with that, the entire PSU banking basket also doing very well. Look at Indian Bank, that particular stock higher by almost 4%. Union Bank, Central Bank, all of these stocks, all of them higher by over 3% each. We did speak to the management of Biocon some time ago. Positive news flow coming in terms of the launch of insulin Gargin, that stock higher by 2%. And Polycab, Friday, this particular stock took a bit of a knock post the results, but the conference call management went ahead and clarified on multiple one-offs. After that, Polycab is doing quite well in the session today. On the other hand, quite a few laggards as well. UTI AMC, well, a muted set of results. The company has been seeing market share loss. That stock lower by over 5%. Dixon, schooled off from the day's highest point. The management has gone ahead and moderated the volume guidance. That stock lower by 2%. JSW Energy, peak valuations, PAT impacted by multiple one-off, stock correcting from the recent highs. And Divi is under a bit of pressure. Recent comments coming from President Trump on weight loss drugs price that could be put under some amount of control is something that's weighing a little bit on Divi's today.
Right, Vivek, thanks a lot for that. So those are a bunch of stocks which are buzzing around, but none more than the mid-cap banks today. They're doing extremely well, and this as UAE-based Emirates NBD Bank is set to acquire a controlling stake of 60% in RBI through a primary capital infusion of nearly 27,000 crore rupees. Will also be making a mandatory open offer. So to discuss this and more and market at large, we do have with us Nikhil Khandelwal, who's the Managing Director at Systematics Group. Nikhil, thank you so much for joining in. Wish you, your team, your family a very, very happy Diwali and festive greetings as well. Let's start with the banking space. You guys have been bullish on it. From the lows, the Nifty Bank has actually, rallied almost 10,000 points. And it's at a fresh record high, screaming and moving further higher as well, only boosted by this deal that has taken place in RBL Bank. And that's caused a bit of a flutter in all the other mid-cap banks as well, which are buzzing around today. What's your view now after this run-up? Do you think there's space for more? What would your top picks specifically in the banking and financial space be?
Yeah, well, good morning and good afternoon. Thanks for having us on the show. Banking sector, of course, has been, from our desk, has been one of the strongest buy calls over the past couple of months. We have been seeing that the Indian banks per se have been maintaining very strong balance sheet, but also, there's a lot of value which was beginning to come in the banking sector. But what has played out, I think, beyond the fundamentals has been a significant vote of confidence on the banking sector by global investors. Which started with the transaction in Yes Bank. I think SMBC transaction, although it was a secondary transaction. A large global bank taking a stake in a mid-sized Indian bank. I think it spoke a lot about the Indian banking sector, followed by the transaction of IHC in Samman Capital, and now this largest FDI in the banking, in the mid-sized banking, in a mid-sized bank from UAE, second largest bank, wherein the net worth of RBL is just about 15,000 crores, and the bank will be getting close to about 27,000 crores of capital infusion. This changes the entire dynamics of the banking sector, and kind of one gray area within the banking sector, which is a mid-sized bank, gets a significant vote of confidence. A lot of such buzz is happening in Federal Bank as well. So, combination of all these developments combined with the value which sits in the banking sector at large gives a lot of confidence for Indian as well as global investors to put more capital within the banking sector. I think broadly this is the broader way which we have been looking at it, but within the space we have been quite excited by the potential value as well as the potential growth prospects within the PSU banks. So while private banks has been an interesting play combined with the potential of earnings rebound and deep value, PSU banks, according to us, are another big pocket of growth and investment, which we have been looking at quite positively.
Sure.
And all our calls are among the larger banks in PSUs, whether it's the SBIs or the BOBs and the PNBs. And definitely those are a significant amount of pockets of capital where there's a lot of value and growth, both quite visible.
Sure. Nikhil, if you could just sort of narrow that down for us, considering that you are liking PSU banks, you like the larger banks at this point in time. So tell us what exactly is your preference list? If you could just list down maybe your top 3 banks within the PSU space, your top 3 banks within the private banking space, and within these two as well, what is your preference?
Right. No, I think what the way we have been looking at the banking space, I think the balance sheet of the banks per se has been, whether it's PSU or private. I'm talking about mostly the larger banks, has been top notch. There is, however, pressure of advances growth, which we are beginning to see in some of the larger private banks. Wherein the larger consensus view and our analyst expectation and our house expectation also on the private banking space for advances growth is high single digits. However, on the PSU banking front, we believe that the advances growth will be in low teens. And that kind of advances growth will mean that these banks will register, the PSU banks will register higher earnings momentum going forward. The second thing in our view is that the quality of earnings, the PSU banks actually generate the proportion of their revenue, which comes from fee income, as well as other sources of non-banking income like housing finance, etc., has been quite low. They have been inching up their fee income portfolio as well as their other non-banking income portfolio and book quite aggressively. And those factors will actually ensure that in times when general NIMs are shrinking, the PSU bank should be able to not just maintain and possibly expand their net interest margins going forward. So a combination of these 3 factors is why PSU banks are actually topping our buy list.
Sure.
In that, as I said, Bank of Baroda stacks up as number 1, followed by SBI and then PNB.
Okay, Bank of Baroda, SBI, and then PNB. Nikhil, then, you've spoken about and you started by saying these flows, foreign flows that have come in from the banking side. Do you expect that to still continue going forward as well for more banks? Federal Bank, obviously, the buzz is going around there as well. And what will it do to the books of these banks then going forward?
No, I think the federal banks or the RBLs, etc., have a significant, I'll say, significant position in the banking space. They have created strong retail as well as corporate base in India, Yes Bank included. The health of these banks, their capability to provide loans, especially working capital financing. And as I think as we move forward, a lot of private and public capex is also kind of increasing. These banks have a significant role in shaping the larger banking sector. I think the health of these banks and more than the health, I think the perception about the larger banking sector through these mid-sized banks has to remain extremely positive for the larger health of the economy. I think broadly, from that perspective, these banks getting some very serious anchor investors and promoters. Secondly, getting this kind of capital will ensure that these banks not just start to engage and come back into the market as far as corporate lending and retail lending is concerned, but also expand other avenues of financing. RBI is opening up the banking sector on multiple fronts, including acquisition financing, etc. And we need strong domestic banking sector to ensure that these new avenues and new growth areas are capitalized by the larger banking sector and the Indian banking sector.
Absolutely. Point is taken, Nikhil, and we wish you a happy Diwali and festive season. Thank you very much for joining in and speaking with CNBC TV18. Well, we need to take a short break with the news that the mid-cap index is up around 0.8%. We have the Bank Nifty also, which is up a cool 454 odd points. Take a short break, but we'll get talking more about the market. Sudeep Shah from SBI Securities will join in with his trading call. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC TV18. Turning out to be a fantastic day for the banks at this point in time. Just look at the way EU Small Finance Bank is moving. It's up around 9 odd percent. We have Federal, which is up around 7 odd percent at this point in time. In fact, very close to its 52-week high, you'd have to say, at 229 odd rupees for that particular stock. IDFC First Bank, PNB, Canara, SBI, all of them showing momentum on the upside. The only one is HDFC Bank and ICICI Bank, both released numbers, both a little bit under pressure at this point. But Manglam is here to tell us what he's tracking on the F&O side. Manglam, go ahead, tell us.
It is weekly options expiry, so what do you call it? Diwali Dhamaka, which is continuously, playing out underway in our frontline indices. The Nifty around the 25,850 mark, doing extremely well. The mid-cap index has picked pace as well after underperforming for the first half of trade. And we have the Nifty Bank, which is doing well as well. What will make bulls happier is that in the earlier part of trade, the India VIX had spiked and now it's cooling off and it's virtually at the lower end of today's trading range so far. And powerful short covering is definitely underway. We'll have some data today to confirm that as well. Why do I say that? Because from October 14th to all of last week, the FII longs actually inched from 7% all the way up to 17%, and shorts were covered by nearly 50,000 contracts, with the Nifty having moved 400-500 points from those levels itself. Who's to say, this won't continue? The top contributors today, all three batters in fine fettle. Reliance up 3.5%, Nifty Bank up 0.8%, Nifty IT Index up nearly 1% as well. So all of them doing too well. The only thing we'll have to watch out for after we moved so much is that the 25,900 call has been fairly well bid in today's trading session, or rather fairly well written in today's trading session as we move towards expiry. So 25,950 to 26,000 may be a bit elusive as we move towards the expiry end of things. But if the market does pick up, then there would be short covering which would power it beyond the 26,000 mark, if at all it does cross that 25,950 to 26,000 mark as well. At the lower level, firm support seen between 25,850 to 25,750. So that's an important mark. A lot of individual stocks in focus from the broader markets. Banks seeing a lot of buying. We have AU Small Finance Bank, Indian Bank, seeing a lot of long positions being added. Though some of the bigger banks, we have Axis Bank as well as ICICI Bank in focus. ICICI Bank is seeing some shorting, and Dixon Tech as well, after their numbers, is seeing some shorting. Currently, that stock lower today. We also have some long positions being unwound in Dalmia Bharat. And finally, the stock of the day has been RBL Bank when it comes to news. But remember, for the last many trading sessions, it's been in F&O ban, including day one of the new series. Now it seems like the bank may come out of F&O ban because of the shorts that have been caught on the wrong side, and the stock, which has rallied almost 9%.
Okay, all right, Manglam. Well, that's on the entire F&O setup from the F&O desk. Sudeep Shah from SBI Securities now joins in to discuss what he's tracking on the markets this afternoon. Sudeep, hi, welcome to the show, and wishing you a very happy Diwali as well. If you could just start by giving us your call on the Bank Nifty, considering the kind of momentum that we've seen today.
Yeah, season's greetings. Happy Diwali to you as well as the entire team at CNBC TV18 and all our lovely viewers. See, Bank Nifty, coming to Bank Nifty, the weekend was a blockbuster in terms of number of results, and except for a couple of them, most of the results were pretty good, or even they've beaten expectations. And the deal of RBL Bank now, so large caps as well as mid cap banking, we have seen it all, and most of them are moving, and they are moving in positive direction. So coming to Bank Nifty levels, 57,700, 57,800 now we feel would be decent support on the downside until this is held. 58,759, 200 can be witnessed. It's just that post opening today, HDFC Bank and ICICI Bank, they have seen some kind of pressure from higher levels because they had moved in the last several days. So apart from that, a lot of mid-cap banks, PSU banks, we feel could continue showing their positive momentum in the coming few sessions.
Okay, and Sudeep, which are the top bets that you're looking at this afternoon?
See, couple of them. Now, the one is from the PSU banking space, that is Union Bank of India. Here we have seen a consolidation breakout coming, and we feel that with the kind of weekly charts, the setup that the weekly charts are throwing up, 137 will act as a strong support, and the stock can be bought with that stop loss. And on the upside, the stock has potential to move up to 151, 154 levels in the coming few weeks. The second stock that is there on our radar is is a defense name, BEL. 415, 416 is where the stock is currently trading at. This also has given a consolidation breakout last week. We have seen a decent support at 410, 408 levels. Every time the stock is dipping to those levels, we are seeing some good buying from those levels. So we feel that PL can be bought with 408 as a stop loss on the downside and a potential target of 427 and 432 on the upside.
Okay, Sudeep, thank you so much for that. We'll be keeping an eye out on all those stocks and hope you enjoy your holidays as well for Diwali. Festive greetings to you as well as a family and your team. But on that note, we're going to zip into a very short break. On the other side, we'll have Manisha Gupta, who will be in conversation with Manoj Jha of Kamakaya Jewels, and they'll be talking about commodities. Stay tuned for that.
Welcome back. Joining us on the show now is Manoj Jha from Kamakaya Jewels. Mr. Jha, hi, thank you so much for joining in and very happy festivities to you. What has been your reading of the market, especially with the Dhanteras done now? How are we looking at the volumes really playing out?
Namaskar, Manisha ji. It was really nice, wonderful experience we have at Dhanteras. Previously, we thought that in Dhanteras we will have a dip of 40 to 50% in terms of volume. But surprisingly, in terms of volume, if you see across the country, not more than 15 to 20% dip in volume we got in jewelry sales. And especially when you see in the bullion we have crossed the limit of last year. It's more than 25% more, 125% we have done sales in bullion. So overall, the festive season is very good, very positive movement is there. Diamond sale is diamond. I mean to say diamond is all the studded jewelry is at par. If previously it was someone have sold 100 carats, so this year they have also sold it 100 carats. So the overall jewelry industry got a very good boost on these days because the last few months was not very pretty good for the jewelry sales.
So, Mr. Jha, are you saying that the Diwali as a month as well perhaps could be working with these numbers if there are any indication to go with?
Yes. Even yesterday, the Dhanteras sale was till 2 o'clock in the afternoon. So there was 2 days for Dhanteras. Today also, you can see across the country, good sales are going on. And I'm saying overall, when you will see the sales of this month, definitely there will be a drop down in the volume. That must be around 10 to 12%. But overall, if you'll see the season, it may come to the par. We are waiting for the gold rate. If it corrects more, then there will be good volume business you can see across the country.
Let me come back to the gold rate then, and those prices clearly have been very, very volatile. If we look at this year, we've not just seen all-time highs, but we've seen very strong percentage gains as well. At these current levels where we seem to be holding 4,200 off those all-time highs, and you do a lot of reading and research in case of gold prices, what is your sense on where could we be if people are buying gold this Dhanteras? Where do you see gold prices by next Diwali?
Next Diwali, little bit difficult to say, but right now I can tell you, gold have reached its inflection point. Even the investor are little bit worried. Previously, the gold have given a big rally in 1979 and 80, and even in 2010 and 11. And after that peak, gold has given a sharp correction. So investors are a little bit nervous there. because last few days you can see a lot of volatility in the gold rates. So that seems that gold have now came in a bubble zone, and you can see some sell-off now. Even at the geopolitical end, you can see Trump is mellowing down a lot of fronts. In Russia, Ukraine also, he is trying to push it should be settled down soon. Even in the tariff war, you can see the China and US tariff also, he is giving some cool statements. So even his shutdown, he have to release immediately. Government shutdown has to release immediately because a lot of rallies are happening in the US and people are really in an unrest position. So all these things are maybe happening soon, and if you can see a sell-off, rather like you can see a profit booking in gold.
Okay.
Also,
So Mr. Jha, what are the levels? I mean, that is something that the viewers would love to know about. So where do you see prices then?
very soon, I am seeing approximate $300 to $400. You can see a profit booking in gold. And at that time, at that level, a fresh investment you can see, because in portfolio, if people having generally a 10 to 12% of gold in their portfolio, but now after the price rise, their portfolio have gone to 18 to 22%. So there also people want to do some profit booking there, and it's in overbought zone. So definitely you can see some sell-off, and $300 to $400 you can see in coming months.
And you were saying that every dip is going to get bought into. So by next Diwali, we perhaps could be looking at higher numbers therein. Mr. Jha, even as gold and silver price is gaining so much, I was speaking to World Gold Council, and they said in last 1 month, they've seen perhaps 60 to 65 more stores that have opened in India. Overall, pan-India, perhaps the number is not so huge, but in a period of 1 month, that tells you the Indian jewelry story, perhaps?
Definitely, Indian jewelry is booming across the country. You can see every year there is an increase in store. You will surprise 5 to 7% increase in the number of stores every year. So especially in B tier and C tier cities, all the corporates are entering. If you take the name any corporate, they have plans. Everyone have a plan of 2030 till 2030. Maximum corporate want to expand their business, their stores by 50%. If someone is having 100, and by 2030 they want to have 150 stores. So in next 5 years, there 50% of growth of stores you can see. But the main point is that, is there any increase in the volume of sales? Because if you can see the couple of years, the import figures is almost same. Import figures is almost same. So volume of gold is not increasing. And that also you can see the jewelry, the products which were made in, example, 100 grams necklaces were there. So that necklace now is made in 30 grams, 35 grams. Technology have, a lot of technology is there. We have taken a lot of technology from the out of country, Germany, Italy and all. So same type of jewelry coming in lightweight. So I can't see much of in volume gain. But definitely jewelry sales will pick up, and a lot of new stores are coming. And in next 5 years, I can tell you, you can see 50% more jewelry stores in the country.
That's a very valid point that you make, Mr. Jha, that by 2030, the jewelry business will increase a lot. But I also get your point that the imports are same. So it's going to be lower volume, but higher business and more margins, perhaps. And that would work very well for the industry there. Mr. Jha, as always, thank you so much for joining us here at CNBC TV18. And with that, we go for a short break. When we come back, we'll talk more markets and stock specifics for you.
Welcome back. Well, stable for the market. So let's get talking about one of the big stocks in focus today. That's Federal Bank. That stock is up around 7% at this point in time. So let's get in some views from the management. In fact, Federal Bank refuses to divulge any possible interest from prominent private equity investors in the lender, but it has lined up a board meet to consider raising funds on the 24th of October, which is on Friday. Listen in to a slice of that conversation with the management.
In our case, we have given a notice of our board meeting on Friday, and we will update you once the board meeting is over.
Can I just, if I can, without of course divulging details and not wanting you to say anything which is against regulations or anything, but is this a minority transaction? The name which is of course being talked about is Blackstone picking up a 10% kind of a stake in the bank. Would I be, without you going into specific, in the ballpark, be correct?
Prashant, as I said, the board will be meeting on Friday to consider this agenda item as we have put up in the exchange. And please let us time till Friday, and after the meeting, whatever is the outcome, we'll give you an update.
But sir, can you, we understand you can't take any specific names, but I believe the bank is already well capitalized. Can you just update us on the latest capital adequacy levels? And also, why are you looking to raise capital? Is this just an enabling resolution? Or are you looking to, maybe expand in certain businesses, wealth, etc.? I mean, why the need to look at capital at all right now?
Like I said, I'll just repeat, just bear with us till Friday. Once the board meeting is over, then we'll definitely come out and give you an update on the outcome of the meeting.
This is a minority transaction, right? That much you can tell us.
I don't even know what transaction you're referring to. All that I know is the board is meeting on Friday on the agenda, which we have put up a notice on. And we will, as I said, we will definitely come back and give an update on the outcome of the board meeting.
All right. So in the past, you have said that wealth management is something that you like to look at. Possibly that you're looking at some inorganic growth in this direction?
On wealth management, Nigel, as you know, we have recruited a head of wealth management who joined us earlier this financial year. And we are building out our platform for launch of the organic offering of wealth to our customers, which is on track. And in Q3, next quarter, or rather this quarter as we speak, we will have the rollout of the wealth offering to our customers. So that is on track. And, we do, of course, want to grow as part of our strategic objective, which we had outlined in the analyst meet. Wealth is a focus area and the organic rollout is on the cards.
And what about inorganic growth, sir?
Nothing on the table at this stage, Nigel.
So the money that you're raising could probably be used for some other inorganic growth?
I don't want to comment on this aspect. As I said, let's wait till Friday and then we can talk more on.
But it's not just an enabling resolution. The intent is to go ahead and raise money, right?
The board will consider all options and we'll have to respect the wisdom of the board.
As we move towards the close of halftime report, as you can see, the Nifty is at the high point of trade, led higher by Reliance, which continues to power ahead. But the last few minutes definitely belong to Tata Consumer. It will be very interesting to see where this goes, largely because the last couple of quarters, their margins have been under pressure because of higher tea prices. But from the peak, tea prices have come down. Is the street betting in better results and, more importantly, better commentary for the second half of this year or not, is something that we're watching out for. We'll get an inkling into that from HUL's results that happen on Thursday. With that, from our glittering team of halftime report ladies, we wish you a festive season once again and take your leave. On the other side, we have Business Lunch, taking all the market action ahead.